Have you heard that a mutual fund company has shut down some of its schemes? So last week on 23rd April, a mutual fund company called Franklin Templeton declares winding up of its 6 debt funds. So are investors' money trapped? Hey friends, my name is Janith and I am an entrepreneur by profession and you're watching Think. So let's try to understand why mutual fund sahi hai is now looking like a question. Let's understand the basics of mutual fund. It is an investment vehicle where money is pooled from various investors into a common fund, which is called as mutual fund, and the same money is invested in different schemes such as debt schemes, equity scheme and hybrid scheme. As the name suggests, in a debt scheme, funds invest into a fixed income instruments such as corporate bonds, government bonds, debt securities, money market instruments, etc. In an equity scheme, funds invest predominantly into equity, that is at least 65% of their investment has to be in equity. And in an hybrid scheme, fund can invest into both equity as well as debt. As in the subject matter, we are talking about debt fund. Let me highlight this point that in a debt scheme, investors generally are risk averse and they look for regular income. These are some highlights of Indian mutual fund market. There are overall 45 registered fund, more than 2,500 active mutual fund scheme, around 27 lakh crore of asset under management as on 31st March 2020, 8.97 crore of total mutual fund accounts. Indian mutual fund AUM has grown at around 15% CAGR in last decade. 53% of total AUM is invested in debt and 27% is invested in equity funds. On the right side, you can see top 10 mutual fund companies. SBI Mutual Fund is India's largest mutual fund, followed by HDFC. Franklin Templeton is also amongst top 10 based on AUM. Thus, the fund in discussion is not a small fund and thus raises serious questions and concerns in market. Let's get a background about Franklin Templeton. It is an American investment company formed in 1947, headquartered in California. The company is listed on New York Stock Exchange. It has presence in around 25 countries and it employs over 9,000 people. So the company is fairly large. It has a global AUM of around $700 billion. Franklin entered Indian markets over 2 decades ago and currently operating in 3 cities. Majority of its business is done through distributor network. As on 31st March, company had 36 schemes and a value of around 86,000 crore in AUM. Average AUM graph shows how Franklin Templeton's AUM grew between 2015 and 2020. Also, as on 31st March, company had around 36,000 crore in equity, 14,200 crore in high credit debt and 31,260 crore in managed credit debt. Here, this part showcases name of all 36 funds, 16 under equity scheme, 13 under debt scheme, 7 under hybrid scheme. This part is taken from the data fact sheet submitted by the fund. You can find the link for data fact sheet in the description. The graph on the bottom right demonstrates how these 6 debt funds AUM grew between 2016 to 2019. However, since mid-2019, concerns about funds' asset quality started rising, which led to fall in its AUM. So, what were those concerns? Let's find out. Fund have huge exposures to high yield bonds. Fund have more than 50% of its exposure to the securities rated below AA, whereas industry average is not beyond 17%. So firstly, just understand what high yield or a low yield securities are. High yield securities are those securities for which investors demand higher returns. These are typically high risk securities. High yield securities are also called as high risk securities. These are low rated securities as compared to lower yield securities. Second, out of 88 investments made through debt funds, Franklin Templeton was sole lender for 26 of them. Fund have concentrated exposures to the sectors like NBFC, infrastructure and real estate. Then fund have more than 5,500 crore of exposure towards DHFL, SL Group, ADAG Group, Vodafone Idea and Yes Bank, and all these companies are under financial stress. Also, company had negative cash balances in all these 6 funds, ranging from negative 1.5% to negative 26%. There has been also articles questioning investment style of these funds. Performance data of these 6 funds shows huge deviation from their benchmarks in last 1 to 3 years. These data is also taken from the data fact sheet submitted by fund. On 23rd April, Franklin Templeton announced to wind up these 6 debt funds which were part of managed credit debt fund. Management stated liquidity issue and redemption pressures to be the reasons for winding up. In a telephonic conversation with a news channel, management stated that decision to wind up these funds were not easy and clarified that winding up doesn't mean write-off. Management also assured investors would get their money back as and when they would be able to liquidate their assets. Management also clarified that all other funds remain open for subscription and redemption. Management also evaluated borrowing as an option for honoring redemptions but found unsustainable for those who remain in the scheme. Management also evaluated an option of distressed sale. However, due to current scenario of lockdown and liquidity issue, this option doesn't seem viable. There were some market rumors regarding more 6 funds of Franklin Templeton winding up, which was clarified by management on their website. Let us also understand how did market react to this news of winding up. Almost every news agency covered this news. There was huge drop in value of funds of Franklin Templeton. Also, there were huge sell-off in debt fund market. Approximately 22,000 crore of redemptions were seen in just 3 days. Also, post this incident, the spreads on negative AA rated bonds raised drastically. Definitely after this incident, there had to be regulators' reaction. AMFI came out with an advisory advising investors to stay invested and stating the entire incidents to be one-off. Also, to avoid panic situation, RBI came out with a package of 50,000 crore to create liquidity for mutual funds. And SEBI, to investigate the matter further, may conduct a special audit on Franklin Templeton's issue. So let's analyze the ultimate question: when can an investor expect their money back? So it really depends on the liquidity profile of the underlying assets in those 6 debt funds. Investors can expect their money based on the fund duration, if all these maturities are honored. Based on the management's comment that fund would try to liquidate their positions, investors could get their money back as soon as possible. However, given the asset quality, it is a cause of concern. With this, I would like to sign off. I'm sharing links of all the reference documents used for this video. Hope video was an useful information and you got some insight. Stay safe, stay blessed. Thank you.